Hello, everyone. Welcome all of you to this 18th Sky High Symposium. So, we are meeting since last 18 Wednesday, and on behalf of the Women Members Empowerment Committee of Institute of Chartered Accountants of India, I, CA Preeti Savla, welcome all of you. And this is our initiative to reach out to everyone through this Sky High Symposium. It is our endeavor to serve the best to the members and women fraternity of our institute. And friends, this is one of the series and symposium what I feel that spreads the knowledge, spreads not only the knowledge but also motivates our members, because we look forward that our women fraternity comes and we give the platform to them to speak as well as coordinate. So, and once again, like every time, I request all of you, if you are interested in taking up any initiative, there are various initiatives. So, we are coming up with research projects in various committees, and also sustainability reporting standard board, where I am a vice chairperson. We are coming up with social audit standards, and this is a new concept which the social audits we will be having, and that we have to give the exam conducted by NISM. And if we pass it, we'll be able to conduct the social audit. And all this process will take another 2-3 months, and everything will be live. And our social stock exchange and the NGOs will be able to get listed themselves. So this is the initiative of our sustainability reporting standard board. We have certificate course also. So if you are interested, please go through the website, or anytime you can connect with me at any point of time for any support required on this matter. I recollect that CA Dayavan has already done this course, the certificate course on BRSR. So, there are various other opportunities which we are coming up. We are also revising our course structure and the board of studies, and we had various outreach meetings, about more than 100 outreach meetings across India, and taken up the suggestions. About 25,000 members, students, stakeholders have given the suggestions, and on that basis we have done our meeting, and in the forthcoming council meeting we will be approving our new course curriculum, and will go to the Ministry of Corporate Affairs for their approval. As a part of corporate law and corporate governance committee, as a vice chair, we are coordinating and continuously in touch with Ministry of Corporate Affairs, where the LLP forms, new LLP V3 forms have come up. And if you all are, any of you are facing any challenge or issues in filing these forms, please reach out so that we can resolve the issues. Again, the new company forms are also coming, and the website also may be, the filing website may be also closed for some number of days, because the transition to V2 to V3 forms are happening. So this is just for your note. Again, the 15th August, and our Prime Minister's vision is Har Ghar Tiranga. And for that initiative, we are also celebrating our 15th August. This is Azadi Ka Amrut Mahotsav, 75 years of independence. And friends, we are also have this financial and tax literacy drive at ICAI. So what is the agenda of our vision of our Prime Minister and in vision of our ICAI is that even smallest of the small person, whether is our servant in our house, or cook or driver or sweeper, should also be aware about the finance and the tax literacy, should have the PAN card, should be able to calculate and have the bank account, should be able to earn the saving bank interest, and various this basic requirement of this and of this finance. And that's why we are taking up this financial and tax literacy. And if you take the pledge, so yesterday we had a session and we have taken the pledge to have to get this all these people in our nearby vicinity literate. We have taken the pledge. So if you are taking that pledge, you can have your certificate online downloaded with your photo, that pledge certificate for financial and tax literacy. Just go on that website, financial tax literacy, and put your photo and just put some numbers what are required to be, like Google form, your name and everything. You will be able to generate that pledge certificate within no time, maybe within a minute or two. So, and you can put this in social media, so you know that the members as chartered accountants and a nation as at a large are aware that what contribution by us as a chartered accountant to the nation as a whole. So these are the certain initiatives, very important initiatives, which are been taken by the institute. I thought, and again, we will be coming up in very soon a national call center, because every time I am faced, I always heard that institute में कोई phone नहीं उठाता है, members का, student का query solve नहीं होता है. So this is the initiative which has been taken up, and I have been given the in charge as a vice is a joint convener of this project of having this national call center. And yesterday we had a lot of work into this area, and very soon, maybe within a month or two, we will be coming up with national call center also, because it is our endeavor to serve the best to the members and students of our institute. So these are certain initiatives, the list goes on and on, but this is our agenda today, to hear out our speakers. So we have very learned speaker with us. So starting with Abhinaya, who will take the first session on crypto taxation. So crypto, like, you know, 100 rupees crypto mein dalo, lot of advertisement we are hearing it out, and we always, you know, when money gets doubled, and we always have वो क्या लालच होती है ना कि पैसा कैसे ज्यादा करना है, but how, what are the pros and cons, and how the taxation happens into it. So Abhinaya will actually run through it. We have Nisha with us, who will actually make us understand how to manage the resources. So we have various articles in our office, various employees in our office, and how to manage this, because this is very important part of resource. You know, at leadership level, if we see, the people management is only the main thing which has to happen. The things like, you know, we can get it done, all the technical things, but managing people is very important, so that the people are satisfied, and then in turn they also give us what we require out of them. And Nisha is also, you know, as a specialized practice, or her passion, she's advising on resource management to various CA firms and various companies. So with our request, she has been here to explain you how to manage resources. And we can see various, you know, smiling faces of our moderators, coordinators, Daya Bansal, who is part of Vasai branch, and Kajol Shah, who is a part of Vapi branch, and Vrinda Vakharia, who is part of Bharuch branch. So I welcome all of you, the speakers and the our moderators, and all my beautiful, knowledgeable ladies to this program. And I wish that this program will be really a value-add program. And this Wednesday, again, our 18th Sky High Symposium, very, very value-add, and wish you all the best and best of luck. So over to Daya for introducing our learned speaker of first session. Please carry on.
Thank you, Preeti ma'am. Today is my glad that I am joining this session with all of you, and so much glad that I am taking the presentation of the Abhinaya ma'am, because I am very excited when I seen her profile that she was a ranker holder. So that's really great for me. So Abhinaya madam basically from the Chennai. She was a ranker holder in the position of 26 at the time of CA Inter, and all over India ranker 17th position in the final. She was awarded in above and beyond award in the PwC in the first year of the professional career. She was awarded for the paper presentation on the topic of beneficial ownership, commended for the presentation on income tax topic like corporate gift and GAR, transferring pricing, etc. Merit based scholarship in the higher secondary school education for securing the state level rank in class 10, and because of this state level rank she was awarded by the Tamil Nadu Chief Minister Sri Jaya Lalitha for securing this rank. This is really very glad that she is with us today. And professional experience is 3 years of articleship with the Suri and Company Chartered Accountant Chennai, 2.5 years of post-qualification experience in tax associates at PwC, and specialization in corporate and transfer pricing and international taxation. Currently experience as a manager tax and regulatory with the Narayanan and Company in Chennai. She is initiating and conducting the knowledge of management session, debating on the various tax topics like in PwC and Narayan and Company. She performing the Carnatic musical vocal concert and awarded All India Radio B grade artist. Madam, hereby I am welcoming you and be the part of this greatest person in our this meeting. So take your charge, ma'am. Thank you.
Thank you, Daya, and thank you, ma'am, for giving me this a very warm welcome today. A very happy evening to all the Sterling Chartered Accountants who have joined us this evening. So firstly, I would like to thank Women Members Empowerment Committee for having given me this wonderful opportunity to take up a session and to be a part of Sky High Symposium, a very great initiative being made in our mother body, the Institute of Chartered Accountants of India. And the topics for the day, as Nisha ma'am was saying, is about the crypto taxation in India, which is a very hot and an interesting topic which is going on in the industry. So what is it that we are going to discuss today? So first we will be discussing about, let's have a little bit of background about what is it about cryptos. And then next we'll move on to say how India has begun to tax, how India has commenced taxation regime in respect of the cryptos in India. And then at last we'll conclude with what is the role that we as a chartered accountant are going to play as a part of the taxation regimes and as a part of the schemes in India. Hope I'm audible. Daya, if I'm not audible, just let me know.
Yes, ma'am, you are audible.
Okay. So let's start. So just a little bit of background about the cryptocurrency. As you would all know, so the cryptocurrency is nothing but a decentralized, it's an unregulated digital currency, and it can be transferred over the peer-to-peer network. And it will be verified by network nodes, whom we call it as crypto miners, through a technology called as cryptography. And it is recorded in a public distributed ledger called a blockchain, but the nature or the characteristic of such ledger is that the buyer and the seller's identity won't be known. It is just that there will be IDs for the buyers and the sellers, which will be recorded in the blockchain ledger as such. So how do we own these cryptocurrencies? The moment we say about cryptocurrency, immediately we think about Bitcoins. But is that the only cryptocurrency that is available in the world? No. That was the first one which was introduced, but later on there is n number of cryptocurrencies that are available in today's world. And cryptocurrency is not only the virtual asset that is available now, and there is a lot of developments that is happening over in that area. It is not only the virtual asset. So how do we own these cryptocurrencies or other virtual assets? So that could be a basic question which could crop up in anyone's mind. So how are we going to own it? We can either purchase it through crypto exchanges, just like how we have BSE, NSE. We have crypto exchanges, for example, WazirX, CoinDCX, etc., through which we can purchase the cryptos. Or crypto brokers, just like how we have angel broking or integrated, from whom we purchase the shares. We have crypto brokers as such. So we can deposit our fiat money, which is nothing but the Indian rupee or US dollars or whatever currency that we have. We can deposit that money and we can get the cryptos. This is one way of obtaining the cryptos. Or we can receive cryptos as a consideration for selling goods or for providing services. Or as a part of, say, mining process. Say, for example, we verify the transactions by cracking the puzzles kind of thing, which are integral to this blockchain technology. As a reward for such services, we get cryptos. So that is what is called as crypto mining. And for certain other categories of virtual assets, it is called as crypto staking, wherein we stake the cryptos and we earn them as a reward for the for verification of the transaction. So these are some of the basic terms that we need to know before we get into this cryptocurrency and the taxation stuff. Now, why are we bothered about this? So, what is the reason behind this? So, why is all the countries taking up steps to intervene into this market? So, if you just see from Indian government or India as a country from its perspective, if you just see the statistics for the past few years, that is, let's take from the financial year 2016 to financial year 2021, there is a whopping increase of around 39% in the crypto market as regards the crypto market in India. And India has been developing as one of the largest market for cryptocurrencies. And just to say that Indians have already parked nearly 6.6 billion US dollars in cryptocurrencies until this May 2022. So, like wherever there is there is a growth of a product, there will be an ecosystem which will also grow. So, just like in any other product, this crypto also has an ecosystem which has led to an incorporation of startups. Until now, we have over 230 crypto startups that is operating in India. And wherever there is a startup, of course, there will be investors and who started funding these startups and the other exchanges or the crypto brokers. So there are investments that is being brought into India. There are startups which are being incorporated, and a separate industry is being operated, but without any intervention of the government or the regulatory authorities, we can say. So there are several countries which have taken a step towards determining whether these crypto transactions are legal or not. But barring that, while the legality of cryptocurrencies is still not yet determined in India, as far as India is concerned, it is not yet determined. But still, if you just see from the Indian government's perspective, there are transactions that are taking place in this crypto market, which is leading to gains in the hands of those persons who are dealing with such transactions. And such gains are not taxed. There is a loss of revenue to the exchequer with these crypto transactions taking place at one end. So therefore, Indian government very wisely introduced, before even thinking about the legality, they introduced the levy of income tax on crypto transactions this budget 2022. So, as we were saying, there are countries such as, say, China, which banned the crypto transactions, and that there are countries such as El Salvador which legalized the crypto transactions. But Indian government has not taken that step. They have not yet determined about the legality of the cryptos, but they have gone ahead and said that barring the legality, let's first start a taxation regime with respect of the cryptocurrencies, and that taxation regime is what we are going to discuss in today's session. So let's just briefly look at to the path through which this crypto has traveled. So this everything started in the year 2008 when a white paper was published under a pseudonym named Satoshi Nakamoto. The white paper was named Bitcoin, a peer-to-peer electronic cash system. And later on in 2010, just imagine in 2010, 10,000 Bitcoins were swapped for just 2 pizzas. At that point in time, this Bitcoins would be nothing. Like they would not even know about these Bitcoins or whether this is legal or illegal, whether this has some value or not. But at that point in time, there were some exchanges which has taken place. And later in 2013, RBI issued a circular warning the users of cryptos about the potential security related risk. They thought that there could be, say, black money exchanges, or there could be some money being pumped in from the enemy countries, or such risk like that. Then in 2018, RBI issued one other circular restricting the NBFCs in their payment system in dealing with the virtual currencies. And they typically banned the crypto transactions. But in 2020, Supreme Court lifted the ban, saying that RBI circular is unconstitutional. And in 2021, Indian government took its first step, saying that a bill will be introduced to regulate the crypto market, and they are also going to introduce a cryptocurrency as such from the Indian government to legalize it as a tender, as a legal tender. And in 2022, Indian government has moved ahead and said that we are going to levy income tax on the cryptos, on the virtual assets. So this is the path through which the cryptos have traveled. So this is just a brief background about the cryptos. Now let's move on to what has been the situation in India before budget 2022 and after budget, what is the situation being in. So before budget 2022, as we see, as we saw the path through which the cryptos have traveled. So there were no specific legislation as such, but still there were transactions that were taking place in the crypto market, and Indians have parked almost billions of dollars in that market. So before budget 2022, there were transactions that were taking place, and there were gains which were earned by those people who invested in the crypto market. But there is no specific legislation as such, or there is no specific provision in the Income Tax Act for taxing such cryptos or NFTs. So, what could be the possible view? Is that gain going to be remaining untaxed? Possibly no. Why? Because income from cryptos that will partake the character of income under Section 2, subsection 24 of the Income Tax Act. Therefore, income from cryptos could be taxed either under the head PGBP, profits and gains from business or profession, or under the head capital gains. It depends upon the nature in which it is getting traded. Say, for example, if you are a trader in cryptos, if you are more into trading of cryptos, then in that case, it could possibly be characterized as your business income. Or if you are just investing to take up an increase in the value, then in that case, it could be characterized as a capital gains, and it will be taxable as a capital gains income in your hands. So this was the status before budget 2022, and there are even notices being issued by the income tax department to the assessees or to the persons who have been dealing in cryptos even before budget 2022, and time has to answer what is going to be the solution for that, because one could even say that before budget 2022 there is no specific legislation to tax those cryptos. So therefore it is illegal, or the Indian government cannot impose any taxes on cryptos before budget 2022 is what one possible view exists. But time has to answer the question. Now, after budget 2022, what has happened? While the central government has remained silent about the legality of cryptos, they have introduced a special taxation regime by this budget 2022. But there is no clarification on the legality of the transactions per se, as I already said. Now, what is the special taxation regime which the Indian government has brought in by this budget 2022? Yes, so Finance Act 2022 inserted a scheme for the provisions for taxing crypto income. They didn't define, or they didn't include the terminology of crypto asset or cryptocurrencies, anything like that. But the Indian government coined a new term which is called as virtual digital asset, which was likely to be in the bill which the Indian government tried to introduce in the year 2020 to regulate the crypto market. It could be there. So there is a new terminology of virtual digital asset which has been defined under the Income Tax Act, and this is the start of everything. So Section 247A has defined this virtual digital asset, and the Indian government has introduced Section 115 BBH, which taxes the transfer of virtual digital assets at a whopping higher rate of 30%. And gift of virtual digital assets are going to be covered under Section 56 to 10 under the head income from other sources. And on the tax compliance front, the Indian government has introduced a Section 194S, which obligates the transferee or the exchange, crypto exchange or the crypto brokers to deduct tax at source on the consideration that is being paid for the purchase of virtual digital assets. Now, from this budget, there was a mixed bag of reactions, of course, from the crypto industry, from the legal fraternity, from the CAs, everyone. So people thought that this could be an indicator of the fact that cryptos are being legalized in India. That could be a possible view, but that might even not. That is just a view which people say. Now let's deep dive into each of these provisions. Now, before going into that, we will have to go through this important definition of virtual digital asset. Now, what is this virtual digital asset? So here, virtual digital asset is defined under Section 247A of the Income Tax Act, and the definition is before you all. So it has three parts, and it excludes few things which is on the right-hand side of the slide. So the first part says that any information or code or number or token not being Indian currency or foreign currency generated through cryptographic means or otherwise, which provides a digital representation of value exchanged with or without consideration, with the promise or representation of having an inherent value, which functions as a store of value or as a unit of account, including its use in any financial transaction or investment, but not limited to the investment scheme. It can be transferred, stored, or traded electronically. Now, this definition is very important. It has to be analyzed piece by piece. So the first point says that any information or code or number or token is a virtual digital asset. So what does it mean? So say for example, we have Amazon gift vouchers. We have coupons. Say we have voucher codes which we use in various other applications in order to avail some discounts. Are they virtual digital assets? Because the way it is worded, the way the definition is given seems to be like any information or code or number or token will be virtual digital asset. And it says generated through cryptographic means or otherwise. So which means, say for example, bitcoins are tokens. So they are generated through cryptographic means. Of course, they will be virtual digital asset. But the other voucher codes, which are codes which are generated not through cryptographic means but through other means, will that be virtual digital asset? By the plain vanilla definition of the virtual digital asset, it is. So whatever Amazon voucher codes that we have, Flipkart voucher codes that we have, or the other coupon codes that we have, everything seems to be virtual digital asset by the plain vanilla definition of section 247A. Now, here comes the clarification from the CBDT, wide CBDT notification number 74/2022, dated 30th June 2022, which is given to the right-hand side of the slide, which says that gift card vouchers, if it is used to obtain goods or services or a discount on goods or services, or mileage points, reward points, loyalty card, if that is also used or redeemed only to obtain goods or services or a discount on goods or services, or in case of subscription to websites or platforms or applications, all these will be excluded from the definition of virtual digital asset. So this notification was brought in by the CBDT because of the ambiguity which was created by the terminology used in the definition, in the first part of the definition. Now, let's continue the first part. So here it says that it could be any information, code or number or token, not being Indian currency or foreign currency. So Indian currency is of course not included as a part of virtual digital asset. So why are they excluding this? Say for example, if the Indian government comes up with a new virtual digital asset, a new Bitcoin kind of an asset, then in that case, if it is considered as a legal tender as an Indian currency, then it will be excluded from the virtual digital asset. So therefore, any person who is dealing with that proposed legal tender will not be paying taxes under section 115 BBH or under the special taxation regime which the Indian government has brought in now. So this is point number one. The next point is, if it is a foreign currency, then also it is excluded from the virtual digital asset. Now, what is the definition of foreign currency? So here the Income Tax Act refers to FEMA, Foreign Exchange Management Act, to define the foreign currency. Their foreign currency is defined as any currency other than Indian currency. Say for example, El Salvador has legalized Bitcoins. So it is a currency and it is not an Indian currency. Therefore, obviously, it becomes a foreign currency. Now, the question arises as to whether Bitcoins being considered as a foreign currency will be out of the purview of virtual digital asset. That is a possible question. It is an open-ended question. This has not been clarified. This could be a possible view which a person could take. That it is a foreign currency and therefore it is not a virtual digital asset. This is an open-ended question. Now, moving on to the next point. So here it says it provides a digital representation of value exchanged with or without consideration, with a promise or representation of having inherent value. Then it says it functions as a store of value or a unit of account, including its use in any financial transaction or investment, but not limited to investment schemes. So the Indian government has safely worded this definition. So how they have worded is like the virtual digital assets, the bitcoins, could not be considered as a currency. At the same time, it could not be restricted just to the assets. So it could be a currency or an asset or a mixed bag of everything. So that is how it has been worded. It is safely worded to bring everything within the purview of this definition. And it says that it can be transferred, stored, or traded electronically. Then this is the first part of the definition, wherein the plain vanilla bitcoins, Ethereum, and all other coins, which cryptocurrencies, will get covered. Now the second part, which says that a non-fungible token or any other token of similar nature will also be covered as a part of virtual digital assets. So here the Indian government again says that this NFTs will be defined, the non-fungible tokens will be defined by the central government. But till now there is no such definition which is given, but there is an exclusion which is made by the CBDT notification number 75/2022 dated 30th June 2022, wherein they said that NFT whose transfer results in transfer of ownership of underlying tangible asset and the transfer of ownership of such underlying tangible asset is legally enforceable. NFTs are just like, say, for example, there was a Beeple NFT, wherein there was a painting which was converted into NFT. You could have any asset. It could be your mobile phone, it could be your painting, it could be any asset that you have. You can convert that into a non-fungible token. Non-fungible tokens are irreplaceable, which means it has its own value. It is unique. So you cannot transfer the underlying assets usually with a non-fungible token, but you will just be transferring the tokens in respect of that underlying asset. So that is what is called as non-fungible token. You can convert any asset into non-fungible token, and all those non-fungible tokens which has a value and which is being traded will be considered as a virtual digital asset. And any other asset, digital asset as notified by the central government will as a part of virtual digital asset definition. So this is how this virtual digital asset has been defined under section 247A, which is very much wider as such. So let's have some illustrations. So there are some digital currencies which I've listed in the slide before you all. So Bitcoin, Ethereum, Monero, Litecoin, Dogecoin, Ripple, Dash, Stratus, everything are digital currency which will come under the first part of the definition of BDA under 247A. And the pictures over the right represent the non-fungible tokens, which are all pictures which were converted into non-fungible tokens and which are being traded. So you could just think of some kind of a picture or some kind of an asset, some kind of a paint, which would be converted that has lakhs and lakhs of value. That is how the non-fungible tokens are. So these are just simple illustrations. Just to understand VDAs, let's also study some types of VDAs. So there are no say these are just illustrated. So there are 4 types of VDAs which we can easily classify. So the first one is payment tokens. I hope I'm audible now.
Yes,
So
you
there
are
are
audible.
types of VDAs. Okay, thank you. So there are 4 types of VDAs we have. The first one is payment tokens. Payment tokens are nothing but the tokens which we use for payment of goods or services or towards discharge of debt. It is not denominated in any currency and it is not tagged by its issuer. It can be stored, traded electronically. Examples are Bitcoin, Monero, or Ethereum that we have. Then we have utility tokens. Utility tokens are nothing but tokens which are offered, which are offered to provide an access to a future product or a service, and it offers just the right to a product or a service. So this will be issued at the time of initial coin offering, just like how we have offers that are being given as a part of business promotion strategy. So at the time of issuance of the tokens or at the time of introducing the tokens, this initial coin offering would take place, and those tokens given for or tokens are called as utility tokens. For example, is Dinar. Security tokens are nothing but those tokens which derives value from external tradable asset. Example is the PAXG token, which derives its value from gold, and asset tokens which derives value from other non-fungible underlying assets. For example, Beeple NFT. So this was a token which derived its value from a painting as such. Now let's look into taxability of VDA as such. So now we looked into what is this VDA about under the Income Tax Act. Now we are starting with the more important provision which has been introduced, which is Section 115 BBH of the Income Tax Act. Now, the Indian government has introduced this by this Finance Act 2022, and this is with effect from April 1, 2022, and almost past 3.5 months of, during which it has been operated. So, it says that income transfer of virtual digital assets shall be chargeable to tax at the rate of 30%. So here it gives 3 pointers. The first one is to be a virtual digital asset as such. The second thing is there should be a transfer of virtual digital asset. The third one is there should be an income which arises from the transfer of virtual digital asset. Of course, for virtual digital asset, we went through the definition of virtual digital asset in 40. Now, transfer the income tax department has
Abhinaya ma'am, you're not audible.
yes. Am I audible now?
Yes, yes, now you're audible.
Okay, I'm sorry, I got a bad internet connection.
Recording in progress.
Fine. So we were
Abhinaya ma'am,
discussing
turn off
about
your video, please.
section
You can turn off your
247
screen.
transfer,
Hello.
which was already there. Okay. Yes. So section 2, subsection 47 of the Income Tax Act, so it already defined the term transfer, but that was for the purposes of capital asset, and it was in relation to the capital gains chapter as such. But that definition of transfer has been adopted even for the purposes of virtual digital asset here. And we have brought in those clauses which are relevant for the purposes of virtual digital asset. And it says, sale, exchange, relinquishment, extinguishment of any rights therein, compulsory acquisition thereof under any law, treatment or conversion of capital asset as stock in trade of a business carried on by him, everything will be considered as a transfer under section 247. So if you fall under any of these categories, then the transaction will fall under the category of transfer, and it will be partaking the character of transfer for the purposes of section 115 BBH. So if you have a virtual digital asset and if you have transferred it and if you have earned some income, then you are subjected to taxability under section 150 BBH at the rate of 30%. Now, one other trigger under section 115 BBH is that there will not be any deduction of any expenditure or allowance that is going to be allowed except for the cost of acquisition. So if say, for example, you have paid some brokerage to your crypto broker, or if say, for example, if you have paid crypto exchange some transaction fees, then in that case, no deduction will be allowed in respect of any expenditure or allowance. And one most important thing is that there is no set off of losses that is allowable against the income from transfer of BDA. And if there is any loss that is going to arise from BDA, then you will not be allowed to set off this loss against any other income. At the same time, you won't be allowed to carry forward this losses. So this is the provision about. Then section 56 to 10, of course, we all know that there is a provision which brings into tax all the gift transactions. So section 56 to 10 is one such provision which taxes the recipient of property if it is received without consideration or without adequate consideration, where the fair market value of such property exceeds rupees 50,000. And explanation to section 56 to 10 defines the term property to include virtual digital asset, and this amendment is made with effect from April 1, 2022. One important point is that if there is a property which is received without consideration or without adequate consideration, then in that case, of course, gift tax is subtracted under section 56 to 10. But how are we going to benchmark it with the fair market value? Because for the purposes of section 56 to 10, we have Rule 11 UA of the income tax rules in place, which calculates fair market value of various assets. But while the Indian government has amended section 56 to 10 to include virtual digital asset within its purview, it has not yet amended Rule 11 UA to provide for the fair market valuation of such virtual digital assets. A possible view could be market value of such virtual digital assets could be considered as the fair market value. But as you all know, the market value of the VDAs would be too much volatile that in the morning it would be 18 lakhs and in the evening it could even be 22 lakhs or even 8 lakhs. So that much, given the volatility in the prices of VDAs, then the fair market value should be accordingly calculated, and we should always have the proof to say that whatever virtual digital that I have received is at the fair market value, and this is the market value at the time when I transacted. So that kind of a proof we should have, given that we don't have a particular provision for providing for calculation of the fair market value for the purposes of income tax. And there could be specific instances. For example, we have crypto airdrops, which is just like initial coin offering and coins that are earned through gaming. We do some gaming exercise and we earn coins as a part of winning the game. Or crypto miners or stakers who earn crypto coins for their services. In these instances, there could be a possible allegation that you have received the property, you have received the virtual digital asset without even paying any consideration. In that case, there should, of course, be a clarification that should be provided by the Indian government to say that this is the fair market value and there is no gift as such which has happened. So in these specific instances, we should expect some kind of clarification from the Indian government in order to test it under section 56 to 10. Now let's take a case study just to understand the provisions that we have studied till. Mr. X has acquired 100 bitcoins through WazirX, which is a crypto exchange, for rupees 36 lakhs per bitcoin in the year 2021. After paying rupees 3,600 as a transaction fee, he sold such coins in the following manner. In March 2022, 50 bitcoins were sold at the rate of 35 lakhs per bitcoin, involving a transaction fee of 1,000 rupees. And in April 2022, 25 bitcoins were sold at the rate of 40 lakhs per bitcoin with a transaction fee of 1,000. And in May 2022, he sold the balance 25 bitcoins at the rate of 30 lakhs per bitcoin with a transaction fee of rupees 1,000. So in this case, how are we going to compute gains for the purposes of income, for the purposes of section 115 BBH, which is tabulated before you all? So for the bitcoins which were sold in March 2022, the consideration would be 50 multiplied by 35 lakhs, which will result in 17 crore 50 lakhs. And there is a transaction fee of rupees 1,000 which is paid. But we all know that section 115 BBH prohibits you to take any kind of a deduction in respect of allowance or an expenditure that you have incurred. So therefore, this 1,000 rupee of transaction fee is your out-of-pocket expense that is of no use for the income tax purposes. And you have a cost of acquisition of rupees 18 lakhs, which can be taken from say 50 multiplied by 36 lakhs. So that would give you 18 crores as such. And now the income is nothing but 17.5 crores minus crores, which is nothing but a loss of 50 lakhs. In this case, section 115 BBH says you cannot carry forward this loss. You cannot set off this loss with any other income that you're going to earn. So this 50 lakhs is a loss which is just incurred. That is it. So it is of no use for income tax purposes. Now, coming back to the next transaction. So in April 2022, there was a transaction where the consideration is 10 crores and the cost of acquisition is 9 crores. In this case, there is an income of 1 crore, which is arising out of the transaction. So in this case, there will be tax, which is arising under section 115 BPH at the rate of 30% plus surcharges, of course. So therefore, 30 lakhs would be payable. And here, mind that there is a loss which you have already incurred to the tune of 50 lakhs, but you will not consider that 50 lakhs of loss when you compute the income for this particular transaction. And this is considered to be a standalone transaction. So whenever you transfer, that is considered as a standalone transaction, which is subjected to 115 BPH. You cannot take the credit of losses or expenditure or allowance, whatsoever it is, while computing income. Then coming to May 2022 transactions, here also you incur a loss of 1.5 crores, which will just go away, which will not be of any use for income tax purposes. So here, net on net, if you see how Mr. or how and to what extent Mr. X has gained. Mr. X has bought cryptocurrencies to the tune of 36 crores and he has sold it for 35 crores. So there is a net on net loss which he has incurred to the extent of 1 crore, but still he would be ending up paying taxes to the extent of rupees 30 lakhs because he has made a gain of rupees 1 crore in a particular transfer. So this is how the income tax provisions are worded as far as virtual digital asset transfers are concerned. So while Mr. X has incurred a net loss of 1 crore, he will be subjected to tax under section 115 BBH at the rate of 30%. So this is how it is worded. And there is no deduction that is going to be allowed, no carry forward of losses, no set off of losses. Now, there are certain points which we need to think of in this respect, which have, of course, there are several open points. I've tried to summarize those open points and bring those important points which is open-ended now. The first thing is categorization of income. As the income tax department has clearly said that I won't categorize this as a capital asset. At the same time, I won't say it is a good or a services. So therefore, you will not be able to avail the benefit of the CBDT circular number 4/2007, which dealt with the characterization of income either as capital gains or business income. And this is also because of the non-obstante clause, which is introduced in section 115 BBH. Then the next point is categorization of assets. Of course, here the income tax department has clearly said in a particular notification that whether the VDAs are assets or goods or services, they are not going to comment now. Then coming to the next point on crypto mining or staking. So what is it about mining? So whenever a particular person mines a cryptocurrency, then he gets a cryptocurrency as a reward for the services that he does. He does verification of the transactions that has already taken place in the market, and as a reward for that, he gets he gets a virtual digital asset. This is how it happens, and this is what is called as crypto mining. And whenever he receives VDA, that could attract 56(2)(10). So here there is a clarification that is required from the Indian government to compute the fair market value and to benchmark the crypto mining income with the fair market value as such. So fair market value computation is not yet prescribed till now. But the subsequent transfer of those VDAs which the crypto miners have received as a part of their mining process, that will be subjected to the special taxation regime under section 115 BBH. Now, the next point On the cost of acquisition, there is no definition till now. As we already know, Section 55 of the Income Tax Act deals with the definition of cost of acquisition, but that is only for capital gains purposes, and there is no relationship between that definition and there is no adoption as such of that definition for the purposes of virtual digital asset till now. So therefore, especially where the VDAs are acquired as a reward for crypto mining, the question of cost of acquisition is higher. Then exclusion of foreign currency from media. This is the point which we already saw. So if a particular currency, if a particular virtual digital asset has been considered as a foreign currency, then in that case, the question arises because that could not be taxed as a part of the special taxation regime under Section 115 BBH, because that is out of the purview of media. Then one important question arises as to the taxability in the hands of non-residents. So here, as you all know, non-residents would be taxed only in respect of the income which they receive in India, or which accrues or arises in India, or is deemed to accrue or arise in India. Now, if it is received in India, then it is clear cut. At the same time, if it accrues in India, then that is also a clear picture. But if then when it is considered to be deemed to accrue or arise in India, that is where the question or the issue arises. So what is the place of receipt or accrual that we are talking about? Is that the location of exchange? Is that the location of buyer, or is that the location of seller? So this is not yet clarified, and this is a big question for as far as the non-resident taxation in respect of the virtual digital assets are concerned. And if suppose we come to a conclusion that the place of receipt is in India based on some parameter that could be based on the location of the buyer as such, and if we say that yes, the place of receipt or accrual is in India, then what is the next step? Can we avail DTAA benefit? And which article of DTAA is to be invoked by that person? Is that business profits because he is a trader of cryptos? Or is that capital gains because that is considered as a capital asset? Or is that income from other sources? So there's no clarity around this. But one could take a possible view that because if you take the article on capital gains, that would again depend upon the local legislation, that is on the Income Tax Act. And the moment the Income Tax Act says virtual digital assets are not capital assets, then it will be out of the purview of capital gains article as such. So therefore, one could take a possible view that if it is not falling within the purview of business profits or capital gains, then it would fall under the income from other sources article. Then the last but not the least, how are we going to track these VDA transactions? If suppose Indian tax residents are utilizing crypto exchanges abroad to purchase and sell the cryptos, how is the Indian government going to track? So this could be a bit challenging, but let's wait and watch. Now, having said that, there is a taxation which is going to be discharged by the persons who are dealing with cryptos. So we also need to know how this tax is going to be discharged. So this could either be discharged in the form of advance tax or TDS or TCS or a self-assessment tax. And specifically, Section 194S is introduced as a part of TDS provisions, Chapter 17B, to obligate the persons being buyers to deduct tax at source on the consideration that they are going to pay to the transferor of such VDAs at the time when the transfer takes place. So here, let's have an outlook of Section 194S. So 194S provides that any person who is responsible for paying, that is a deductor, responsible for paying the consideration for transfer of VDA to the resident transferor shall deduct tax at source at the rate of 1% on consideration at the time of credit or payment, whichever is earlier. So here there are certain points which we need to note. It says any person responsible for paying the consideration for transfer of VDA. What is that any person? Any person would mean the persons who are defined under Section 231. Yes, that apart, it says any person. It could be a resident or a non-resident. Then now the question arises as to the concept of extraterritorial jurisdiction. Can that be invoked? Can a non-resident be required to deduct tax at source under Section 194S? So this would be a matter of litigation in future times, is what we can expect. So any person responsible for paying consideration for the transfer of PDA to the resident transferor, here the transferor is getting restricted to the resident, because on the other hand, 195 will apply if in case it's a non-resident transferor. So in this case, the transferee or the deductor has to deduct tax at source at the rate of 1% on the consideration. So the transferee is not going to deduct tax at source on the income portion, but they are going to deduct tax at source on the consideration, and this will happen at the time of credit or payment, whichever is earlier. So now this is applicable with effect from July 1, 2021 2022, and it is not from April 1, 2022. That is a matter which we need to think about, because Section 115 BBH has been introduced with effect from April 1, 2022, whereas the TDS provisions has been brought into effect only from July 1, 2022. And there is one more clarification which says that Section 194S will always prevail over the other provisions such as Section 194O and 194Q. This could possibly be because if suppose the cryptocurrencies or the virtual digital assets are considered to be goods, then 194Q could kick in. So in that case, we could think about, say, should we deduct tax at source under 194Q or S? So for that matter, the Indian government has clarified that 194Q and 194O gets overridden by Section 194S. So if it is a transfer of VDA, you can be least bothered that it will always be 194S that is going to be applicable. And there is a clarification which is given under the CBDT circular number 13/2022, which says that consideration would be net consideration, which is after reducing the charges levied by the deductor for rendering services and after excluding GST. So what do they mean by the charges levied by the deductor for rendering services? Do they mean the transaction fees that is charged by the crypto exchanges? Could be. There is no proper definition as such for this particular term, but that could be a possible view. But if you just compare Section 115 BBH with Section 194S, 115 BBH says we won't allow any expenditure against the income that you are earning. On the other hand, 194S says no, you can reduce the charges levied by the deductor for rendering services at the time when you deduct tax at source. So there is a possible mismatch between these two provisions as regards this point is concerned. And is there any exception? Because there could be persons who are dealing in cryptos, who are dealing in virtual digital assets, but they are not but they are not subjected to tax audits, or they are not a business income earning people. So yes, for that matter, the Indian government has provided a concession. They have introduced this terminology specified person, wherein they said that if you are an individual or HCF, and if you are not subjected to tax audit during the previous year, or if you don't have any income under the head PGBP, then you will be called as a specified person, and the specified will not be responsible for deducting tax at source if the value or the aggregate value of the consideration is going to be lesser than rupees 50,000 during that previous year. And on the other hand, if you are not a specified person, then the threshold limit that is applicable to you will be rupees 10,000. And there is one more concession which is provided to say that specified person will not be required to get any TAN for the purposes of deduction, and that is a better and a good concession which has been provided by the Indian government. So they need not obtain TAN, they need not deduct tax at higher rate under Section 206 AB as such. Now, and there is a provision under Section 194S which empowers the Central Board of Direct Taxes to issue guidelines, to issue notifications to clarify the provisions of Section 194S. Now, how are we going to comply with this? So here we have two things to see. One is if the transfer has taken place for a cash consideration, then it is easier that TDS has to be deducted by the transferee and it has to be remitted on or before 7th of the following month, just as a usual case. But if there is an exchange of VDA or if there is a transfer for consideration in kind, then in that case, Section 194S says that the transferee should ensure that taxes are paid before releasing that consideration. And there are some extra forms which are prescribed, say for example, Form 26QE, which is prescribed to be filed by the specified persons, Form 26QF, which is prescribed for filing by the crypto exchanges on a quarterly basis, and of course Form 26Q is amended so that can be filed for transactions and which are subjected to TDS under Section 184S as well by the other deductors on a quarterly basis. And a very important point to note here is that there is no possibility to obtain a lower deduction certificate. So 194S will always be at the rate of 1%. And if you don't comply, what happens? You will be considered as an assessee in default. Interest under Section 201(1)(a) would kick in, penalty under Section 271(c) equivalent to the TDS amount, and there might even be a prosecution under Section 276(b) ranging from 3 months to 7 years with fine. Now, there's a CBDT circular number 13/2022 as well as 14/2022, which has listed a range of transactions, and they also have clarified the mechanism of tax deduction. Let's quickly look upon that. So we have, I have just jotted it down in the form of situations, different situations. Situation number 1A, wherein it's a plain vanilla transaction between a buyer and a seller. So the buyer gets a VDA and as a consideration, he gives cash. So the buyer has to deduct tax at source at the rate of 1% on this consideration at the time of credit or payment, whichever is earlier. This is just a plain vanilla transaction. Now, situation 1B, wherein there is no consideration which is getting cash consideration, but it is an exchange of VDA. In this case, CBDT says that the buyer and seller both have to pay tax, and they'll have to prove to each other that taxes have been paid on such transfer. Situation number 2. Now comes the situation wherein the crypto exchanges are involved. So if the buyer pays the consideration to the crypto exchange, and the crypto exchange in turn pays the consideration to the ultimate seller or the broker. So here in this case, there is a possibility that the buyer won't even know who is the seller on the other side, because he will know only the crypto exchange through which he is transacting. So in this case, the CBDT has absolved the buyer from being obligated under section 194S, and here the CBDT has obligated the crypto exchange to deduct tax at source at the rate of 1%. So if you are transacting through a crypto exchange, you can be least bothered, and you can be rest assured that the crypto exchange will carry out the tedious obligations under section 194S. Now comes the situation 3. If there is also a broker involvement, then in this case, what happens? Should the crypto exchange deduct tax at source or the broker? So here, what the CBDT says is, theoretically, both exchange and the broker has to deduct tax at source, but the exchange and the broker can enter into a written agreement so that one person, like mainly the broker, can deduct tax at source at the rate of 1% when they pay the consideration to the seller, and the crypto exchange has to report this transaction in Form 26 UF. Even in this situation, the buyer can be least bothered about the tedious obligation, because the crypto exchange or the broker will carry out that. Situation number 4, wherein the exchange is going to be the seller. So here in this case, buyer need not deduct tax at source under section 194S, provided there is a written agreement between the buyer and the exchange to say that the exchange will carry out the tax obligations from its part, and the exchange will report the transactions in Form 26 UF. And there is situation number 5, which says that if there is a payment which is made through payment gateway, in this case, payment gateway will not be obligated to deduct tax at source under section 194S, provided the buyer or the broker deduct tax at source. So in this case, if suppose the buyer or the broker doesn't deduct tax at source, then the payment gateway will be obligated. So therefore, hereafter, payment gateway is always good to have a declaration from the buyer or the broker to say that TDS is taken care of by the buyer or broker in respect of that particular VDA transfer transaction. And the last situation number 6, wherein there is an exchange of VDA between the buyer and seller, which has taken place through a crypto exchange. So here in this case, so if it's just a plain vanilla transaction between buyer and a seller, in that case, the buyer and the seller both have to deduct tax at source and pay their taxes accordingly and show off the proofs to each other. In this case, there is an involvement of crypto exchange. Now here, the CBDT has clarified a particular manner through which the crypto exchange has to carry out the TDS obligation. So what the CBDT has clarified is the crypto exchange has to deduct tax at source at the rate of 1% of the VDA path that is being traded. Then they'll have to convert such VDAs into something called as primary VDA, which is defined as Bitcoin, Ethereum, USDT, and USDC, which are readily convertible into INR. And at last, during midnight, they will convert all such primary VDAs into INR, and with that INR, they will be depositing TDS. About the manner in which the crypto exchanges should carry out the tax deduction. So these are the 6 situations which are contemplated by the CBDT as such. So here, of course, there are open issues. Say, for example, the residential status of transferor, how are we going to tackle? There are some issues around that. Now, given the time, so I would like to conclude this session by discussing about what is the role as a chartered accountant that we should play in this kind of a market. So the first thing is, if someone comes to you asking for an advice on the transaction of BDS, peruse the transaction, determine the income arising from the transfer of TDS, considering all the CBDT notifications and circulars and the provisions in place. Ensure that you don't claim any expenditure or a deduction or an allowance or losses in respect of such VDA transactions. Then whenever you go for an audit of crypto exchange or crypto broker, or it could be a crypto trader, include verification of transactions on VDA as a part of your audit program. And do flag off the client wherever tax compliance is required. And if the client is apprehensive, provide some other suggestions. Say, for example, you could suggest the client in obtaining a declaration from the transferor on an exchange that tax has been paid, so that you can be absolved from the tedious liability or at least the penalty or the prosecution obligations. And wherever it is necessary, arrange for an indemnity. Then wherever the TDS has been done, report such transactions in clause 34A of the tax audit report. And at last, as a chartered accountant, we should play an important role and play at least our role in liaising with the government to clarify the important, at least to clarify those provisions which needs clarity before that is being implemented as such, with respect to section 115 DDH and 194S. So this is how it is being operated till now. Of course, there are many open-ended points which are yet to be clarified by the CBDT. We'll wait for that. So time has to answer all those questions. But that kept aside, we as a chartered accountant should play our little role in implementing these schemas as such in our country and make it as a better and a strengthened. So at last, I would like to thank Women Members Empowerment for having given me this wonderful opportunity to be a part of Sky High Symposium. Thank you once again.
It was indeed a wonderful session, ma'am. I request participants, there are certain questions which we have received. So
Yes.
we'll like to take that first. So there's a question from Meena Tanna. Form 15GH can be filed for no reduction of TDS.
No, actually, here we don't have a possibility to get a lower deduction certificate. So therefore, there is no possibility to file in Form 15G or 15H as such for this kind of a transaction, because it is specific, because that has to be enabled under section under the particular provision, but that is not enabled for PDA transactions. So as such, for now, this possibility doesn't exist.
Okay. The next question is with regards to getting the wonderful PPT you have made. There's a question from Miss Babita Agarwal. Cryptocurrency received before 31st March 21 treatment.
So it is before budget 2022 as such, like the provisions under section 115 BBH has not kicked in. So a possible view is that the legislation is not in place. So therefore, such transactions should not be subjected to taxation in India. But on the other hand, there is also one other possible view to take, that even though there is no specific legislation, such income could be taxed as a business income or as capital gains in the hands of the transferor or in the hands of the person who is earning such income. Because this would partake the character of income under section 224, because that is a wider definition, that is an inclusive definition. Therefore, it has the power to bring in these kind of transactions. So before budget 2022 provisions have kicked in. So one possible view is that there is no legislation. The other possible view is that, yes, that could be subjected to taxation under the head PGBP or capital gains as such. And there are notices which are being issued by the income tax department to those persons who are trading in cryptos even before 31st March 2022. And there are no rulings as such till now because it's too early. But we'll have to wait and watch how the department is taking a stand on this.
But I think for safer side, we should consider it as a taxable income and pay the taxes.
Yes. Conservatively, it is better to offer it as income. If the person has already offered it as income during the previous years, nothing like it. But if suppose they have not offered it as income, then they could take a possible view, or they could at least defend their position by saying that there's no legislation in place and they cannot invoke 115 DBH or 194S at that point.
Okay, ma'am. There's a question from Miss Shirley Matthew. Can we have some insights in transfer pricing? I think it's not connected. Can we have some insights on transfer pricing? I think it's a different question all the way. Okay. There's one more question from Miss Loina. if excess TDS is paid under Section 194S? Can it be adjusted against payment against another section, or claim for refund of excess TDS can be made?
Uh, for that matter, say for example, if you've done an excess TDS, even under the other provisions, you will be able to adjust it against the subsequent liability. Say for example, you as a deductor, if you have deducted in excess of what is required to be deducted, then you can adjust the TDS obligation from your perspective against the subsequent TDS obligations. But you will also have to factor in your transaction with the other person, because the other person might think that you have deducted in excess. So that person should not claim a refund from you, and at the same time, you cannot adjust it against your subsequent obligation. It cannot be a double adjustment. It can be either one. Either you should give it as a refund to the deductee as such, or you can adjust it against your subsequent obligation. Either one you can avail.
Okay. I think we have this much questions. I really thank you for being here, for sparing your valuable time with us. I, on behalf of Women Empowerment Committee, hello, am I audible? Abhinaya ma'am?
Yes.
I,
Yes.
on behalf of Women Empowerment Committee, heartily thank you for sparing your valuable time and sharing your precious knowledge with us. I hope everyone have really enjoyed it, and this session was really brainstorming, and we look forward for more sessions with you. Now, without taking much time, I hand over to CA Vrinda Vakharia for introducing our next speaker, Miss Nisha Gala.
Hello, am I audible?
Yes, you are audible.
Yes. Hello everyone, this is CA Vrinda Vakharia from Bharuch. First of all, I want to convey my heartily gratitude towards ICAI and Women Members Empowerment Committee for organizing such an amazing series for women by women on every Wednesday. And I feel immense pleasure to introduce our eminent speaker, CA Nisha Gala. Along with being a chartered accountant, she is also a certified experiential educator and founder of Look Beyond since 2012. Look Beyond works with individuals, firms, and corporates and helps them to challenge, explore, and exceed their potential. Her role has been that of a catalyst to transform the ideas into realities and challenges into opportunities. She has been provided services like consultation in management effectiveness, strategy and growth planning, performance appraisal and evaluation, process audit, human resource planning, and consulting to MSMEs, corporate, and various startups. She is also helping organizations in developing office administration and human resource systems and processes and adopt the best practices for effective management. She is also a facilitator, trainer, and mentor for students who are pursuing our chartered accountancy course and also MBA. She has catered to companies and firms in the food managing industries, logistics, diamond, real estate, etc. She has delivered talks and lectures at various forums like CVO Chartered Accountant Association, Thane region of WIRC of ICAI, Chamber of Tech Consultants, WELL, well, that is Women Entrepreneur Learn to Lead, etc. As a professional, she is also associated with GBCA and Associate Chartered Accountant and Praveen P. Shah and Company Chartered Accountant. She has also associated with Reliance Media Works Limited. She acts as an advisor and secretary at an India Brazil Chamber of Commerce. She is also faculty with WIRC of Institute of Chartered Accountants for conducting GMCS courses. She is visiting faculty with Narsi Munji College of Commerce and Economics. After delivering this amazing introduction of Miss Nisa Gala, I am now excited to listen her as it was my honor. And over to you, Miss Nisha Gala. I'm excited. Please continue.
Thank you so much. And I hope the excitement continues. First of all, thank you, Women Members Empowerment Committee, for allowing me to come and share what I have gone through in this last 20 years of my association with corporates and firms. And yes, a lot of I was going through the cryptocurrency, presentation, and I was like, thank God I'm not into all this, because I am away from, all this practice. And yes, coming back to today's topic, resource management. Now, I mean, it's like, for women to talk about resource management is like, yeah, showing showing a mirror the mirror, like, because we are all pro at it in our own way. So today I understand that we have a very mixed audience. Some of you would be in corporate, some of you have your own firms, some of you are seasoned, as in, you have been into this practice for long, and some of you are new. So whatever I am going to be sharing would, be relevant, and you would be able to, connect with them, with, whatever points I have. Uh, resource management, like, Preeti ma'am said, it's about people, and, there is no crypto, or there is no, it's no secret of how, we all manage it in our own way. So, although I have a presentation in front of me, I'll try and, share the live experiences, and what I have gone through, in the course of my interactions with my clients. So yes, we're all by definitions. We start our anything with our definition. So by definition, resources would be any stock or supply of material. So when I say, I wish this was more interactive, but anyways, when I say resource, well, the first thing that comes to our mind is, yes, people. But along with people, it is a lot to do with our education. It has to do with time, money, our network, the infrastructure that we are operating in, and to a large extent our family also, with the help of whom we progress on a daily basis and to achieve the goals which we are. So managing all of this, it is together, is a challenge, when it comes to prioritizing one thing against the other, and how we smartly and effectively do all of it. That is where, the challenge lies for all of us. So what are these challenges? We often do speak about it. What, irrespective of we having all these resources, the challenges, we are always more, mostly we are, the time, as with women, those especially time is one of the biggest constraint, and yeah, unable to get out of routine, cost, practice is shrinking, and all of this. And yes, managing people. So let's see what, when we say what are the challenges specifically, we are going to look into people as a resource, and what are the challenges we face and what we can do about it. Managing people, whether we are, hello. Is there an issue? Okay. Yeah. Okay. Yeah. Sorry for the delay, and I believe you all will understand my plight. This is, a typical situation where we have an important meeting to rush to, and then the last moment the maid calls up and says she's not coming. So I was there through the the cryptocurrency presentation, and everything was working fine. And here, so anyways, so coming back, so this is all about managing with whatever limitations and we have. So thank you for all those who are still there with me. We'll go ahead and we'll try to wind up in the due time and make up for the loss. Yeah, managing people. So this is one, yeah. People are not your important asset. The right people are, and this is exactly, this in itself, speaks everything. When we say right people, right, that itself poses a challenge, finding the right people for our organization. And then comes, the related issues of their salaries, the integrity, retrenchment. So these are all the people managing issues that or a big corporate, whether you're an unstructured organization or an automated company, whether you're a retailer or a big store, irrespective of that, the problems are the same. The scale and the intensity of the issues are different. So while a corporate would be having more structured way of and more organized way of dealing, and they have everything planned, their challenges are still the same. So and these challenges are going to remain. So there is nothing that we are trying to in fact, the pre pandemic and the post pandemic, in both these areas, the issues have become dynamic. The challenges that we were facing before are now have completely taken a U-turn, and now what we are facing in terms of that itself, that is changed. So there is dynamism in all of that. So all those who have their hands free as of now, I just want you to do this one mental exercise with me. Imagine you have a bunch of paper. How would you be holding them? Okay, a handful of sand, a butterfly, somebody who's falling, a box of stationery. If you've visually gone through the way of handling each of the way of holding each of these have been different, right? And the same logic applies to whether it's the different type of resources that we are handling or the different type of people that we are handling. The only difference here is that the sand will not ask, why are you holding the paper like this, and why are you holding me like this? Whereas in an organization, yes, one employee would immediately stand up, why is this one being given a preferential treatment over me? But while it was the same hand, the way we handle the way we handle the situation differently, the same applies to handling people in the organization. While our leadership style could be, one, the way we would handle different people in different situations would be different. And that, if we are able to crack that, we are able to sort most of the challenges that we either face or we could be likely to face. Yes. So, yes, HRs across, this has been a research that, the type of challenges that HRs generally face, especially with reference to people leaving. and then dissatisfaction. And so whether you are in a corporate and have an HR team who's handling all these issues, or whether you as a practicing chartered accountant assume these HR roles, broadly the challenges faced are this. And especially when you are your own HR, the challenges, because you're not this your most of your time goes into execution, and these areas often get neglected. So either you're juggling with work or you're juggling with people, and there is where most of the energies are lost. So yes, I mean, again, understanding what the moot issue is, if we are able to tackle that, then most of the challenges can be met with. Uh, this slide is like like a potato. It mixes with any vegetable. So the same slide applies to money, the same slide applies to a child. You can, but the truth is that any thing which has to be dealt with, it goes through its own stages. So here today we'll talk about the stages of the people that we who are in our organization. So I am presuming that we are all in that leadership role, where we are we have to deal with people around, and in within our organization. So the stage number one of recruitment, uh, my experience has been that a lot of uh, prospective challenges could be met if this particular stage is considered in very minutely, and it is given time, in the sense that more than likely chances are that the kind of recruitment we do is always on a need basis or an urgency basis. And the irony, what I have seen with my clients recently, has been that while because of the pandemic there has been a loss of jobs, on the other hand, the firm, especially chartered accountants firms, are facing a big, huge manpower crisis. They are not able to find people. Now, what is causing this gap? One is that maybe what is available, because of job losses, that is not matching with the requirement. The salaries which people were drawing, and now which they are expecting, that is not matching. And third, again important, is the requirement, the work in terms of the skill sets required, or the knowledge required, or the experience required. There is a mismatch, and because of this there is a big gap in the demand and the supply of people. And to bridge this gap, obviously more efforts are required in in wherever there is a devoid. So but again, before we get into randomly recruiting people, I very, very strongly feel that there is a need to understand the role which is required. Let me give you an example. Say suppose a client has approached requiring, they want an outsourced accountant for their team, and we have an accountant who's been with who's doing work, and who's very well placed, and he's and has been in that role for years, and there's absolutely no, we don't even give a thought of but she's doing her job well, so there is no need to change or do anything. Now I want, there is one need where there is a requirement of a client, and on the other hand I have a resource which for the first time it doesn't even occur to me that she could be the resource. Now the typical way of doing handling is okay, the client has a requirement, these are the skill set, this is the number of experience, so let me put out an ad, and then I will find the resource, and pay, I mean the pay scales and everything are achieved, and you start hunting for a resource. A different way of looking at this requirement or need could be that I have with me a resource who's been there with the organization for 6, 7 years. She's pretty much settled in her role. We never know. It could be possible that she's saturated. Probably for last 5, 6 years, she's been doing the same role. And how long would be she continuing doing the same stuff? So is there a possibility to elevate her? Is there a possibility that I recruit somebody junior and give her a helping hand, and maybe she could take this role up with the client, where the client just wants her, an outsourced accountant? If we start thinking this way, the we are catering to 2, 3 issues simultaneously. One, obviously the client requirement of resourcement is there. Second, this person is with me, is settled with what she's doing. I know her, she knows the organization. Yes, she understanding my client's business could take some time, but if she's in the role of an accountant and she knows the laws and the accounting aspect clearly, it is just a matter of time where she'll pick up. Third, she will feel elevated, and we will be able to match her, we'll be able to give her a growth that we can expect. And fourth, we are creating a second line of team, who could do the more basic kind of the basic kind of entries, and the basic accounting work. Now this is when I look when I what I mean when I say check for a roles change, check for spare capacity, check for team requirements. If we are able to do this team assessment more, and we do it more analytically, I feel a lot of recruitment issues that are there can be resolved. And one of the big challenges that I come across often is that people become redundant in an organization, in the sense that they've been there for so many years, and they are not able to grow, and it's only the salaries that are growing, and somewhere we are not able to match the salaries with the kind of work that we can be extracted from them. So again, recruitment stage is something where, if possible, try and give this stage more time, and more it's sometimes by just looking at a resume is not a good way of appointing or not appointing a person, because at times it could be that the person may not be having the kind of experience you're looking at, or the person, but the attitude and the approach will will help in elevating that person, or making that person a resource for you. So while having said that, my submission is that have clarity in terms of what kind of person you're looking for. As far as possible, avoid stopgap arrangement, because then that becomes, it's like in Hindi they say hati palna. Because then if a wrong person, or misappropriate person enters the organization, there could be its own repercussions. So yes, it is a chicken and egg situation, where having a person is more important than having the right person. But then if that is the case, then we ensure that the other, in terms of training and other things, are looked at, so that the person does, if not an asset, that doesn't at least doesn't become a liability. So yes, during an interview, again, while we look at the resume and the basic questions we are asked, half of the battle will be won if you are able to gauge what the person is all about, like what are his aspirations. Is the person really so at time a very ambitious person is also very harmful, because for all they could be job hopping. And at the same time, a completely laid back person also could be, take away a lot of your energies in trying to motivate him. So strike the right balance, see what is the team you're looking at. So if some, say for example, you have a strong leader with a, a team is being led by a strong leader and you need to appoint somebody there, probably you need a person who will just follow instructions, because, and then the team. So whenever you're forming a team, complementing the team members is very important. You need not employ people who are, all of the same, who look alike and work alike. And yeah, so that is something. So recruitment stage, I feel, is a very important stage. It's just like, when you're just the seed which you're going to be sowing, it better be of a good quality. Then only you'll be getting the right fruits, and you'll be able to enjoy the fruits. Next comes the training part. I mean, again, what right now what we are doing, that is also a training. While a person is looking at his own growth, he or she can see that growth only when the team or the organization is on the growth mode, and the profession also is, along with it, there's growing. So it has to be, the balance. Everybody, I have my firm and my team walk together, and along with that, the profession walks, takes a leap. So that is the way. I have to keep that in mind whenever I'm recruiting. So even if I'm recruiting, or if I see a person, I have to be able to, at least see a growth of that person for the next, 1-2 years, after. So while the job in hand is there, what more can I do? If not long, at least midterm, what can I offer him? Because year on year, giving that 10%, 15% rise is not what we call growth. That is just a monetary, we're just trying to match inflation or thing. But so eventually that growth will be so high that if we are not able to, cater to the training part, it will actually pinch you when, when you're giving that that raise, because then you feel that the job which is in hand is not matching the kind of monetary compensations you're paying. So the only and very important way to tackle that long-term issue is that on a gradual and more often stages, keeping the team trained with whatever. Anyways, with the kind of laws and that are coming, we are bound to keep ourselves abreast with the changes and all that. But just keeping that, and keeping that to ourselves is not important, is not the only thing. Having a team equally trained, so it's like, in a dahi handi, that below the team also needs to be strong enough so that, you can reach the ultimate goal. So whether on the job, off the job, in-house trainings, or you send the team outside, whatever manner, do have a training plan in place for your team. And the trainings have to be either, little prospective. It's not that, once everything is done. So for example, now if something is going to come up, have that momentum going on in the organization as to, what you need to keep abreast. So it not be a post-mortem training that, once it, the bus is already left, then the training is of no point. So having a good training program in an organization, again, is one of a very crucial thing to this. So while big corporates have their own plan thing, this is not a very regular feature with mid-sized firms, or small time, or or smaller firms. So but at nonetheless, it is crucial. Motivation, the biggest motivation, nobody can motivate anybody. I feel a person can motivate oneself only. So how much ever I may offer motivation to others, I cannot motivate unless the person wants to feel, or feels motivated from within. And that motivation can come, and one of the major factors which contributes to it is the feeling of belonging, the feeling of, the sense of ownership to the organization, to the people, or to so if an employee feels like, this office is mine, this office people are mine, and then you again, then even if such a person leaves your organization for whatever reasons beyond your control, that person will still continue to be an asset for you outside your organization, because then, even so, whatever way he can, he probably direct some clients to you, or he could help you with some resources. And having such connects is very helpful. So there are different ways of motivation. Need not always be monetary, and in fact they should motivation is less monetary than the feeling of through all these appreciations, recognitions, compensations. So these are the tools which again we need to have as a part of our organization, and ensure that they are taken. So it's like, for example, somebody said that, no, we have a very good motivation, we do take care of our employee grievances. So somebody asked, how do you do that? No, we have a complaint box outside, just outside so anybody who wants, you can put in their complaints, and that box is there. So how often have you opened that box? No, there are no complaints only. That means my organization is running, everybody is very happy. And the other side of the coin, when you talk to the employees, no, what is the point in giving the complaint? Nothing, nobody looks at it. Nobody, last time I sent a complaint, no, for 2 months it was just lying in the box. Now if this is the kind of these are not the kind of gestures or activities or initiatives that you need to take. So if you're taking up the challenge of ensuring that your team is motivated, it might as well be from the heart. It might as well, the efforts are genuine for the results to be genuine. So another way of motivating, like I said, the feeling of belonging. So there are a lot of tasks within an organization which you can, have your team do. For example, lot of team people, feel motivated organizing festivals, organizing, so they become, so you take that headache off your shoulder and give the task to the team. Okay, fine. The Independence Day is coming. You plan out something, and the energy you all must have witnessed, the energy, the vigor, and the whole environment changes, and everybody is participative, and the whole festivities are definitely meant for that. But apart from these festivities, say you don't have an office manual, have some small team and say, okay, fine, we need to have manuals, we need to have some policies of timings and working from home. So you design something and come up with your ideas, and then we will have a discussion on that. Now that is when you are sharing responsibilities and making them owners of whatever responsibilities of the organization are there. So these also could be the motivating factors which go in a long way in having a good decorum in the office. Performance appraisals. Now this is a very what do you say, crucial, and yet where it's an area which is often understood, misinterpreted, for the reason that the way large corporates do, it's very mechanical. They would either have a form which you have to fill, and then you submit it, and then finally whether you get a A plus, or depending on that you get your percentage of increase. Now the way what I feel we miss out on is the opportunity of taking this year-on-year exercise as a, a way of communicating what is expected and what is being missed. Now, if we take this whole exercise, let it be an annual exercise, but the review is, for the whole year, it's like, a report card is given that, this was the problem, and this is, but the whole year has gone by in, just for you to communicate that. So while this exercise could be an annual, a review could be done, on a more quarterly or half yearly basis, where if there is something which needs to be addressed, it is addressed well in advance. So performance appraisal should not be looked as just as a mechanism for giving a percentage rise in salaries, but it should be more of a feedback and feed forward kind of a thing, where you hear out what the team is saying, what the people have to say. So more than often, initial stages, you will come across, ye nahi ho raha hai, this is not happening, and this was the problem. So look, ask them also, don't give me problems. If you have, do you have a solution to this? So that it has to be like, a to and fro kind of a communication. If you come to me with problem, come to me with what do you think is a solution, and we will brainstorm the solution too. So this, if we don't have a more structured way of a performance appraisal in the long run. So when smaller organizations, when I mean smaller, I mean the team size is small, and it is often felt that this is mainly for big corporates. But eventually you realize that not having a structured way of, or an objective performance appraisal eventually creates some distrust and discomfort amongst the team. So as far as possible, having more transparency in the way you appraise people, so objectivity along with a little bit of subjectivity in this whole process could again help in a long way in managing people. Again, because kitna bhi aap, how much ever we go into automation nowadays, there are a lot of tools, and you'll get a lot of apps, and everything can be you can have a scorecard and all that together, and the human element that robots cannot, or your computers cannot take away from you. The kind of one-to-one interaction on an annual day or on an annual basis which you have with your team member, nothing can compensate, or nothing can be an alternative to that interaction. You can actually, so if I may put it, you take, as a team, as a leader, if you take the ownership of your team will take the ownership of your organization. Yeah, I mean, if I can, bring out, it's like, it's like a house. I mean, everybody, is sharing responsibilities, everybody. So the, elder member of the family's role is to, ensure that everybody is in good terms with each other and everybody's needs are catered. They will in their own take care of the other things which do, and that is the way everybody grows together and feels appreciated. So again, performance appraisal is again, so all these stages which you're looking at, performance appraisal would be the investment, what you're investing in the team, that is important, that will play the crucial role. Retaining team, so retaining people, now that again is so the biggest, like you saw in the statistics also, the biggest issue people organizations have, that people are leaving more faster than before. So in fact, after the pandemic, that has become a more more challenging, because now the aspirations of people have changed, and the lot many issues. The needs have changed. So yes, retaining people has become a bigger challenge, and bigger the challenge, more time is required to have a more sustainable approach and mechanism to deal with it. So while people have they are leaving for financial goals, better growth prospects, either they are saturated with the kind of work that is there, non-conducive environment. So the team feels bosses or the team players, the other team players are not good. The boss feels that the team player is not good. So that kind of an environment is there. Health issues, lack of belongingness. These summatively, these are the challenges that are seen. Now growth, now financial goals, obviously if you feel that the resource is worth keeping, then some kind of negotiation, some kind of we are, I mean, as chartered accountants, we are all good at that, but still that cost benefit analysis of the cost and the investment that you have done in that particular person, and what would be if you have to appoint another person in that place, how much can you match up to that? So that analysis will always be crucial when it is in about a crucial member who's leaving. So like I said, the financial goals, how are we how well are we be able to match them? Better growth prospects. Now most team members feel, if you have plans for your organization and you have not shared the same with your team, that for the team, we are I mean, the organization is where it is. So unless if you have on a regular basis, communicated with your team as to what you're planning, not like post doing it. So if you're having opening another office in, say, on a different city, let your team know that these things are in the pipeline, so at least they will see that okay, fine, even if there is light at the other end of the tunnel. So let them also see that if the organization is growing, what would be their role. Say for example, this is a typical situation in corporates. Two corporate mergers, the people at the so one company merging with the other, everybody is shaken, because now when a merger happens, a lot of roles get redefined, and then you don't know where you stand in the organization, whether your job will remain, not remain. So that communication at the right time is very important if you want to retain the right people in your organization. So seeing, so you, the as a leader, responsibility of seeing how your team is growing is also on you. So you have to be even often at graduate levels or basic level, it is not their capacity to see how they are growing. For them, it is coming for a job, going, and year on year they can do the same thing, not knowing where they have not utilized their capacity to the fullest. So as a leader, the role has to be to see the growth of your team members also. Saturation, non-conducive environment, we are all aware of. All of us ourselves are trying to strike out that balance between work. So like I just shared that example where a set accountant doesn't know, well, she is also happy with the job. She doesn't know that she could be elevated, but imagine an opportunity like this, you speak to her, is she ready to take up a challenge like this? More likely it is that she would be ready, and that itself would be a motivation of a different level. So understanding, eyes, having your eyes, ears open as to what is happening in the organization within your team is crucial, along with the pressures that we have in executing the work in hand. If you're able to manage team, like I said, they will handle, matlab, then you will not have to worry about work, whether they will sit till late night and complete the work, or whether they will do extra efforts in having things accomplished. So retaining understanding where the issue is, so if there is a dissatisfaction, having a one-to-one talk becomes very important. So spending that 15 minutes to half an hour with the person, understanding what the grievance or what the issue is, again is has and that has to be done with the immediate member. You can't leave that task to an HR. So HR, while an HR person or a down the line team member can do a preliminary, if that person is matter to you, you sitting with that person, and showing concern, that is important. So yes, I'm putting before you and a uh, very positive picture of how, when everything you think of as a resource falls in place, then the journey upwards becomes more smooth. So challenges will be there, the hurdles will be there, but your energy to deal with those challenges, your aspirations to deal with the challenges is high. You don't get bogged down with that. So taking each of these resources, whether it is your network, whether it is sharing responsibilities, whether it is managing clients, having everything in place, one by one, if you are able to manage these, tactfully, then it's just a matter of time where, for you to move from one level to the other is not, a big challenge. So with this, I just like to say that human people as a resource, and considering that as a long-term, equity investment, and definitely the fruits will be there, provided we are aware of, what, the importance of, this, and that importance nobody can, take away. So with this, I thank you for this opportunity.
Uh, Thank you, ma'am. It was really a very nice session where we could learn the practical aspects which we may face in future for the people who are facing in current. Now, I would like to take a few questions which are in question tab.
Yes.
Just a minute. So there's question from Miss Radhika Mundada. Work from home job for women CA who after marriage cannot shift to metro cities. Kindly guide for the same and how to be updated in our career for such women.
Okay. So again, like I said, yeah.
I'll repeat the question.
Yeah.
Work from home job for women CA who after marriage cannot shift to metro cities.
Okay.
Kindly guide for the same. And there's then another question, and how to be updated in such situation.
Okay. So thanks to the way we are using information technology, yeah, I think metro, non-metro is matlab, again now become a secondary. If you are able to find find such profiles. So a lot of people are looking at the kind of work that is there. So when in the pandemic period, we've all got used to working from working remotely and not being a part of the organization. I mean, not being there physically present. So having said that, finding people who are okay, finding profiles that could match your requirement would be crucial. So for you to find the job which which matches with your your time schedule, or the kind of profile that you're looking at. While it is crucial initially, it could be possible that the profile, so like I said, the experience that you have may not match with the kind of profile which is in your hand. Say for example, you've always done income tax returns, and now there is a requirement for GST. Is it a challenge to learn GST? No, I mean, if you may call it, if you're ready to learn something, and for that the recruiter also is ready. Okay, fine. If you, even if you don't have experience, it is a basic. Be open to such opportunities that are there. For all. So then, for all you could take up 1 and 2 and 3 assignments, and in the course you would have updated yourself with the with knowledge of GST. This is just an example. So accounting jobs also, there are a lot of so with Tally or with interface, it is easy to now take up files and send files and all that. So again, so the crucial part here is finding such jobs, matlab the training or staying updated. Already all these professional organizations are giving opportunities. So staying trained, because now you have more time with you, because you don't have to commute. So it's just a matter of click of a button, you're there. So using those time wisely is important. One of the very crucial things, irrespective, so while you found the job, you're training yourself, discipline is one of the very, very key things that anybody who's working from home needs to needs to follow, because that is one challenge which organizations are facing, that when for working where they don't want work, or they are refraining from having people to work from home, is the discipline part. So if it is if you agreed that you are going to be on the job from say 9 to 1 or 9 to 5, you better be on the job at 9 to 5. You are available. It should not be that camera off here. So that commitment, that discipline, if you are able to maintain, and if the organization is able to trust you on that, and you're able to deliver, then I think work from home, that is not a challenge in itself. So yes, sitting at home, you have more uh, you have more time to attend and keep yourself trained on. So whatever topic you take up, it is just a matter of being at it and upgrading yourself.
Okay, ma'am. Thank you. Now there's one personal question from my side. So basically, women who are not married or are in stage of getting married, like, so for them, there are certain decisions like having a very good opportunity in the city they are staying currently, and maybe if they get married, the opportunity they cannot avail it. So in that case, how to decide upon something, or how to make that decision easy?
So it is a juggle between priorities. So while I mean, if that is crucial, it is a very individual question whether I choose my career aspirations over my this. But if we are able to like I said, Naki, find a midway out. So for example, while you cannot you have to shift to a different place, is there a way out that opportunity can be taken to that place, like by working remotely? So you take that opportunity, but you work remotely and you're able to deliver. Is there that a possibility? Sometimes we don't, because it's like if if you're really, really eager and really keen, towards the opportunity that lies, you will only try to find a way out. The pura kainat will help you to get a solution
Agree.
to this. And nonetheless, if you choose, say for example, if you choose to say relocate and the opportunity goes by, it's not something to be disheartened. मतलब ऐसा वो, yeah, that opportunity, look out, be positive, and look out for something else to happen, because with women we always will be in that dilemma of children or meeting or work, or so those or a social being at a social gathering, so those challenge, and we get bogged down with these multiple priorities, often having to choose between one priority and the other. It demotivates us. It puts us on a guilt trip. All of us are in the same boat. But again, getting, like I said, our family is again our very important resource. So in managing these challenges, if we are able to keep up with the confidence of our families, then then nothing, then going ahead can be is just a piece of cake blessing. So having Preeti ma'am at the helm of the institute itself is an inspiration of how and knowing her personally, I know how her whole family has helped her in coming to the stage where she is. So there's a lot of inspiration which we can draw from the people around us. When we see people, especially women around us, so they have also done their whole share of sacrifices and are at where they are. So yeah,
Yes,
I
ma'am.
hope I'll be able to, although it's like, I do my answer your question. Yeah.
Yes, 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 definitely, ma'am. It's gonna help me. Uh, am I audible?
Yes, yes.
Yes. So, as it's rightly said, no duty is more important than that of returning thanks. I heartily thank you, Nisha ma'am, for sharing your valuable time with us and enlightening women members with the opportunities they can take with the managing techniques which they can follow in their day-to-day life. I also thank Women Member Empowerment Committee ICAI for giving me this opportunity to taking such wonderful initiatives. Without much time, I would like to conclude that thanks to all the participants for watching this program, for participating the series which has been launched by ICAI for their benefits. Thank you, everyone.
Thank you, everyone, and warm greetings for the festive week ahead. Happy Independence Day well in advance. Yeah.
Thank you.
Thank you.